So goes the small business owner, so goes Staples. Our Ellen Braitman tells us what we're learning about the health of these businesses from the earnings out from Staples today. Ellen.
Hey there, Mark. How are you? Well, these earnings really showing problems continuing for the companies, but also perhaps some initial signs of stabilizations. In terms of Staples, those earnings did come out match what analysts had been looking for, but important to note, down 38% from a year ago. Majority of the company's sales coming from small businesses buying items like printers and office furniture, not from the retail customer. And these companies certainly have been slashing their spending. I spoke to someone at the National Small Business Association telling me that 42% of members who responded to a recent survey, they have concerns about the ongoing viability of their business. And just 7% said they anticipate economic growth in the coming 12 months. And while that's an incredibly small number, it has been moving higher. So let's circle back. Let's bring it back to Staples. Same-store sales, they're stronger than forecast, but you're still talking about a decline of 5%. Now, despite that decline, shares have been moving higher with retail stocks in general because you've got that anticipation the economic recovery is going to come in sooner rather than later. I spoke to the company's chief financial officer earlier, and he spoke to this point.
We're finding that they're coming back and they're willing to start going after business again, but it's not going to be the same as it was before. Small business is not purchasing the discretionary items that they did prior to this recession. They're always going to be more careful, or I think for some time.
All right, and why it's important to look at them. Take a look. The shares of Staples have moved in sync with GDP since the recession started. So certainly here really seems to be a good read, a good proxy, Lori, for what's happening with small business spending. Back to you.
Ellen Braitman live in the newsroom. Many thanks. Let's continue talking retail and take a look at the group's performance so far this year. Here's Bloomberg's Adam Johnson at the markets desk. Adam.
Yeah, Lori, if this doesn't get your attention, I don't know what will. Retail as a group up 57% year-to-date. Think of that. That's practically 4 times the market. And, of course, I'm talking about the XRT. That's an ETF which effectively combines 60 separate retail stocks. Obviously, it trades every day. Investors can buy it. The XRT up 57% year-to-date. And, of course, what's so interesting is it's not the stocks you would expect that are leading us higher. Walmart, Costco, the places people go, obviously, in a down economy. It's the high end. Take a look at some of the names that are leading us. It's really pretty surprising. Whole Foods, WFMI, up 198% year-to-date. J.Crew, of course, Michelle Obama's favorite retailer, up 158% year-to-date. Nordstrom up 111% year-to-date. Again, these aren't names that you would think would be doing well, but obviously they are. Let me show you something that will really catch your eye, and it puts in perspective what's happening here, Lori. All right, retailers up even as sales plunge. What am I talking about? Here are the Redbook same-store sales. Look what happened starting in about March, just off a cliff. And yet, look at the retail stocks, this XRT. It's gone up as sales have gone down. Obviously, investors playing for a rebound. Obviously, investors think that those retail sales will start coming up. That's really what it's all about, Lori. People buying ahead of what they think will be the trend.
All right, Adam, thanks for that. So for our calendars, what do we need to know? What other retailers are reporting this week?
Yeah, well, as a matter of fact, Ellen was talking about Staples, of course, Big Lots this morning. Big Lot, they buy up, when a company's going bankrupt, they go in and buy the whole inventory, sell it out. They beat by 5 cents. That stock is up 6-7%. A few others, J.Crew, Williams-Sonoma, Dollar Tree, Tiffany. Tiffany, think of that. Their earnings are going to be up 2%. Goldman Sachs has a piece out this morning on Tiffany, the analyst over there, Adrienne Chapra. She, as a matter of fact, says there are 3 things that you can sort of take out of what's happening in retail. Gross margins are up, sales trends are turning, and guidance is up. That's the Goldman Sachs call on retail, and you see it on the stocks.
Bloomberg's Adam Johnson. Adam, thanks.